Hello, everybody. Welcome to External Financial Reporting and Corporate Social Responsibility, or my upcoming, my accounting 262 class, which I'll be teaching for the first time this spring, 2025, at Irvine Valley College. This is Part 3B, Audit Committee Charter and Independence Questionnaire. So as we kind of go through my disclaimer and copyright notice, the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. The presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties, or hence the third parties. I do not claim any copyright that belongs to those third parties. So in the previous video, we kind of laid out the different types of corporate governance that is required for publicly traded companies. And one of those requirements is that of an audit committee. And audit committee has many important and many different functions. And let's go through and look at some of them. The best way to do this, and I will include this in the links below. We'll take a look first at the Walt Disney Company. And so when we look at this audit committee charter of the board of directors, and so here you have the overall goals. Now, one of the things is if a company is publicly traded, they have to disclose this on their website. So any company that's publicly traded, you'll be able to find this. Hence, if you want to create an audit committee charter, I can take it and modify it. So again, something to go through and think about. In fact, the Securities and Exchange Commission encourages looking at prior disclosures of other companies and using that language. And the reason why is it has been more than likely reviewed by an SEC examiner. So here we go. The oversight is of the integrity of the company's financial statements, compliance with internal controls, legal and regulatory requirements, the qualifications and independence of the company's independent auditors, and the performance of the company's auditors and the company's internal audit function. So remember, when you have a board of directors, right, you're going to have a majority of independent directors. Get into the independence in just a moment, but that independent directors, they will be the only ones serving on the audit committee. You can invite others in to go through and listen, but again, you have to have an audit committee. One of the major things that they do is that the auditors come in and they will give presentations. The auditors will communicate directly with the audit committee chairperson and the other audit committee members. The audit committee also handles the hiring and firing of the auditors. It is not management's job to hire and fire the auditors. It is extremely important. It is the job of the audit committee that is made up of independent members. So when we kind of go through and look at this, committee shall be given the resources and assistance necessary to discharge its responsibilities, including appropriate funding, unrestricted access to company and personnel documents, and company's independent auditors. Also have authority with notice to engage outside legal counsel. So if something happens, then basically you can appoint outside auditors or outside counsel to assist you in going through things. Generally does not happen, but it does from time to time happen, depending upon what's going on. Now, here's the membership. To be a member, you have to be independent as established by the rules of the Securities and Exchange Commission and the listing standards of the New York Stock Exchange. So there you go. All committee members shall be financially literate. Generally, in real life, you have to have one person who is a designated financial expert. And I'm going to show you this momentarily. It's a self-designation. That's what you kind of go through and do. So procedures. You're going to meet 4 times a year. Why is it 4 times? Because you're going to have 3 quarterly reports and 1 annual report. And this is when the auditors will be coming in and basically presenting their findings. And if necessary, they'll have a closed door meeting. So companies management is basically the financial statements are those of management as well as establishing internal controls. And then over here, when we go through and look at this is what the audit committee needs to go through and do. Review with management the significant financial reporting issues, judgments, and estimates. Review, again, not established, but review the accounting and reporting treatment of significant transactions. Review with management the company's independent auditors significant changes to the company's accounting principle, the effect of regulatory accounting initiatives, meet periodically with the auditors in private as appropriate to review their reasoning and accepting or questioning significant decisions made by management. My philosophy as a CFO when I served as one is like, as a former auditor, this probably companies won't like this, but like, dude, the numbers are what they are. If you're going to argue about different kind of accounting treatment, that's probably not going to go over too well unless it's actually justified. But don't argue for the sake of arguing. So to review any audit problems or difficulties with management's responses, and you kind of go over here, review earnings press releases, right? So it's the role of the audit committee is to review those, review draft quarterly and annual financial statements, making sure that the disclosures under the management discussion and analysis are absolutely appropriate, and the relationship with the independent auditors, be directly responsible for the appointment, compensation, retention, oversight of the work, as well as the termination. Review the scope and extent of the audit services to be provided. Review the plan, non-audit professional services. This is really important because you really just want to be limiting things to audit. And I believe it is tax. Again, things always change, but you can do tax work as an accounting firm if you're also doing the audit work. The problem comes in is that if you start doing consulting or other types of things which may impair the auditor's independence. Make sure that they believe that the outside auditors are independent, review the responsiveness of the auditors, right? This is actually really important. If you're a small organization and you hire a big four accounting firm and you're not a Meta Platforms, the big four firms may not give you necessarily the best service. I'm not saying that this is always what's the place is, but there are a lot of different accounting firms that are registered with the Public Company Accounting Oversight Board, PCAOB. And so very important is you want to make sure that the auditors are being responsive. Also, if appropriate, again, there's different levels of market capitalization when you have to go through and do reporting on internal controls. So you're here to basically, the company shall have the responsibility for overseeing that management has implemented an effective system of internal controls. And then again, making these various different inquiries, relationship with management auditors, management audit. So this is more about internal auditors, making sure that this kind of goes through and happens. Also, receipt of complaints. If there is a complaint on a hotline, right? Every publicly traded company is responsible for having a hotline. If there is a complaint on a hotline, as the audit committee chairperson, someone is or somebody designated by the audit committee is going to have to go through and review those complaints. In my experience with this, for companies where I've worked for, it's usually a customer that's calling to complain about that something didn't get delivered, whatever may happen. So I forward that to the other members and say, hey, this is what I think it means. Preparation of reports. I basically prepare and approve the committee's report to be included in the annual meeting of shareholders. And then basically committee shall do an annual evaluation of its own self. So that's one. If we come over here and look at Meta Platforms, here you go. With Meta, they have an audit and risk oversight committee charter. Basically, you have over here membership. Again, the common thing here is you have to be an independent director responsibilities and duties, appointment and oversight of independent auditors. You're going to see a lot of the same language coming through here, maybe some slight variations. Studies and advisors, minutes, compensation, and then over here, and then basically reviewing themselves. So you're going to see a lot of kind of like, oh, here are some different ways of going through and looking at this between different companies, but you're going to see kind of like those commonalities in the audit committee charters. Now, one thing is I actually had a counsel who allowed me to, and very kindly and generously, this is a 33-page questionnaire. When you go, and I'm not going to include this in attachment, but I'm just going to kind of show this to you and kind of point out a couple different things. When you're going through and becoming a director, especially if you're becoming an independent director, you have to go through and fill out a questionnaire. And this is extremely extensive, but it's very, very important for you to go through and to complete. The reason why is basically being like coming over here, basically your background. What's your address? What is your date of birth? Why is the date of birth important? Is because it is disclosed as a director, your age is disclosed in the SEC filings. Are you related by blood, marriage, or adoption to any director? Why is that? Because it may impair your independence. Now, please indicate all positions and offices you presently hold with the company or its subsidiaries for the period of time you've held each one. So if I was CEO and I'm fired and I'm still on the board of directors, I can't all of a sudden say that I'm all of the sudden independent. It doesn't work like that. There's like a cooling off period. So again, it's just going to depend upon the situation. Provide a personal biography. Why is this important? Because when you're going through and completing, when they're doing if you look up my name on SEC filings, you will go through and see like my background and my biography. It's really exciting. So this will be, and they need to kind of go through and do this so you can kind of get an understanding as to where the directors come from. So here's a listing of all the companies you went through and did. Did you ever file for bankruptcy? Have you been ever convicted for fraud? Why is this important? If I am a convicted fraudster and all of a sudden I'm an independent director of a publicly traded company, I may be impaired or I may not be the best person to put in front of shareholders. Have I been convicted of a criminal proceeding? All these different parts. Have I been a subject to any order? Have you been found by a court in a civil action, right? So then you'd have to go through and explain these different parts. Then you have to talk about your stock ownership. If I own more than, say, like, I think it's more than 5%, I may not be considered to be independent as a director. You got to list out all your different warrants. If I disclaim any beneficial ownership, any shares held by an immediate family member, what's your compensation, third party payments, right? So if in addition to being a director, if I'm also selling things to the company, that's a problem because again, if I'm both an independent director and a vendor, that may cause problems. Do I have an employment contract? Have I had any of those? Do I owe the company money? Again, these are different things that are going to be impairing independence. Remember, when I'm serving on the audit committee chair as an audit committee member or compensation, nominating, and governance, which require independent directors, we have to go through and look at all of these different items to make sure that, oh, I can be independent from, I can basically make the best possible decisions on behalf of the shareholders that are not going to be clouded with management. Because remember, I'm elected by as a board member, I'm elected by the shareholders. I'm appointing the CEO and CFO, but if I'm somehow in collusion with the CEO, CFO, that's going to make me non-independent with regards to my representation of the shareholders. So over here, directors only, do you have any business relationships? Change in control, right over here, indemnification agreements, adverse interest. Have I been suing people? Compensation, more business relationships, directors only, independence. Here we go. There's some funny ones in here. Do you have any relationship with the auditors? Over here, any kind of organizations like basically are part or controlling shareholder that has made payments to. So again, if you have family members that are doing business with the company, that's not a good thing. Um, do you currently plan or any kind of compensation basically from the board? Okay. Affiliated person, FCPA, FINRA. Are you a member of FINRA? And then kind of going over here, and then you kind of go down over here and look at the salary, other kind of benefits that you may have gotten from the company. Okay. Kind of going down over here. Any SEC type stuff. So yeah, so and again, when you're going through and listing out your experience, and one kind of thing is when it comes to being uh, an audit committee must have a designated financial expert. That does not mean that they're going to be a CPA, but rather that this is a self-certifying type part. And, again, this is just something to kind of go through and consider when doing this. So, audit committee, to big takeaways: hire, fire, receive reporting from the audit firms, looking at internal controls. If you need experts, you can go through and bring those in. The directors of the audit committee have to be independent, meaning that, again, the most important relationship is that between the shareholders and the directors. If the directors also have relationships with management, it means that they are not independent. Therefore, it would essentially prohibit them from serving as an independent member of the board of directors. And these questionnaires are really here to essentially ensure that, okay, these people are truly independent. So I want to thank you for watching. Please remember to like and subscribe. I look forward to seeing you on the next video, and I will be including these links below, and I will see you on the next video. Have a great day.